What is going on, guys? We're going to be going over a trade recap today. It is the end of the week, it's Friday, and we ended the week on not the greatest note. We're down 2% for the week, so total we're down 2% on the funded account. And as of last week, I did take a 1% loss, a 1% win, and this week it's a 2% loss. So that being said, we took 3 trades this week. We took one on Monday, which resulted in a loss. We took one on Tuesday, which resulted in break even. And I took partials on trade as I noticed that it was going to react off that level, as you guys could see in one of my last videos that I posted. And then today we took another loss. Now, today could have been avoided. Today's loss could have been avoided if I would have done my the new entry model that I normally am going to start trading. So that is the 5-minute order block entry model that I posted a backtesting video of. I'm going to be switching to that model strictly for reasons that I've gotten more data and more positive data on that backtesting model. And it just gives you more room to work, more room to set up. It gives you just more room to have your stop losses. Essentially, it just gives you more wiggle room to play with, and it has just a higher win rate compared to the 1-minute entry, which I took today. And I'll go over the trade that I took today. The markets were fairly choppy during the hours that we traded, so we got wicked out. And that being said, though, let's just dive right into this video. So starting off, we'll look at the 1-hour time frame here, and I'll do bar replay quickly just so you guys know. So coming up to our trading hours here. So we came up, we swept out all the time-based liquidity. We swept out Asia low, we swept out London low, and we were coming up and we were in this 1-hour order block area here. I didn't map it out. I just didn't want too much to be interfering into our trading zone here. But we have this 1-hour order block, and you can see clear as day, we were respecting it before the 7 a.m. mark. So I thought to myself, we have higher potential of coming more to the downside, because if you look at the overall trend, where are we? We're in a downtrend, high, low, lower high, lower low, lower high, lower low, and so be it, keeps going down. So my thought would be price is going to want to come back down to maybe this area and continue to the downside for the rest of the trading week. Now, coming into the session here, I noticed that we broke structure here on the 15-minute. And then coming down to the 5-minute time frame, I noticed obviously we broke structure and we disrespected this bullish fair value gap. So to me, that was telling me, hey, like we have potential to go lower. I want to take a trade to the downside. So ideally, I wanted to see a price come up into this area here, and then we take a trade more to the downside. Now, what the new the new entry model would have been is I entered strictly off this order block candle here. And then stops would have been at the high, and then obviously we would target 1 to 2. So that would have been the entry model that we should have taken, but I didn't take that. So what happened here was price came up and then tapped into the order block area. So price tapped right into where I wanted it. So I wanted some extra confirmation and said, hey, like I'm going to wait for a 1-minute break of structure with the fair value gap, and I'll enter off that fair value gap. So patiently wait. We get this fair value gap candle. So I entered off the fair value gap here. I put the stop where the 5-minute order block was, right above the 1-minute fair value gap. And I target obviously 1 to 2, waiting for this low to be taken so I could take risk off the table. So we got tapped in. Price pretty much nearly falls down, comes down to our break even point just about, rips up and takes us out at break even. Now, if I would have taken the normal entry model, so if I would have actually entered off of the order block up here, and then stop would have been right there, and take profit 2 would have been there. We would have actually had a break-even day. We would have been out of the markets today. We would have been at no win, no loss, straight break-even. That's what I should have traded, and I am a little disappointed I didn't take the trade on this half. But waiting for the extra confluences was nice, and unfortunately, it did result in us losing. And if you look, price did just chop around. And then obviously later down, we came up to completely take out the high there. So price is wanting to continue going to the upside. So I was on the wrong side of the market today. For that sake, I'm not unhappy about the trade. I'm not happy about the trade. I wish I would have followed the new entry model that I back tested, because I've noticed that it's performing a heck of a lot better than the 1 minute strategy. Though don't get me wrong, the 1 minute strategy and the 1 minute entry model is amazing. But with back testing, I've noticed that the results of getting stopped out on the 1 minute time frame are a lot higher, and the win rate is actually a lot lower than the 5 minute entry model. On the 5 minute time frame, you don't catch as many trades, but you catch the trades you want to take, versus the 1 minute, just want a 1 minute move. Let's say we're trying to take a long, swept out all the lows, took out a lot of liquidity, and then it has a little spike up, and it looks like a good entry model, you enter, but it really wants to keep going low. The 5 minute actually takes away that mess and allows you to not take those trade opportunities for if price wants to continue going lower, then we would just not trade that day, because obviously we're not getting what we want. So on this half, I could have avoided the loss today by entering off the 5 minute order block here that was made at opening bell. But that being said, it's a learning lesson that we all need to learn. And from the studies that I've done and the back testing, the strategy that I have there will occur losses, just like every other strategy that ever is out there. There will be losses. And if you just continue doing the exact same thing over and over, it will eventually work itself out of the drawdown and back into profit. So I'm not concerned. I'm not concerned about this at all. But starting next week, we're going strictly into that 5 minute order block entry model. I'm not even going to be looking at the 1 minute time frame anymore for my entries. I'm not going to be for the next 3 months. This is strictly what I'm going to be focusing on, is just this 5 minute entry model. And then from there, I'm going to go back and see the results on it and see how we do. But so far, like I said, back testing has been very good. But anyways, this is the trade that I took today. And I'm going to be posting my daily recaps, or my trade recaps, every single time I take a trade. And basically, yeah, I'll get those out to you guys as soon as possible. And I'm also going to be looking into doing a full year of back testing. So I'm going to do a full year of 2023 of back testing this 5 minute entry model and see how it performs throughout the entire year. I'll be looking to do that over the weekend and also into next week. So stay tuned. I'm going to make a video not doing the back test, because it's going to take way too long, but I will do a video on the results of that, and I'll get those out to you guys as soon as possible. But anyways, if you guys like these videos, please hit that thumbs up button, hit the subscribe button, and leave a comment on any kind of future videos you guys want to see, because I'm more than willing to take suggestions, and I'd love to just keep pushing content out for you. If you guys want to see more, stay tuned for the next video.